Hello traders, Cousin Vinny coming to you from theclosingprint.com on August the 4th, 2019. In this edition of your weekend video newsletter, we'll discuss the indices and the weakness that persists. Most of our indicators are turning lower and are somewhat bearish. We have the indices all red, with the exception of the London Stock Exchange, which was higher last week by more than 20%. The Bombay Stock Exchange continues to look pretty weak, showing 4 black crows on the weekly time frame. Institutional sentiment, we saw buyers at the low of the day on the 60-minute time frame, and tick Q for the Nasdaq continues its bearish trend. And we have breadth pulling back, in some cases nearing extremes. The S&P equal weight index is starting to set up a long in the short term, despite the weakness that we normally see in the month of August. The put call ratio is mixed for the total put call, the equity only put call, and the index put call ratios. VIX traded at the highs on Friday at 2011. That reversed and closed lower at 1761. US dollar is at extremes as well, but reversed at the upper Bollinger Bands. Bonds broke out last week while yields moved lower. Gold reversal failed in its breakout. Copper's bearish in the short term, headwinds for the economy if that continues. And West Texas crude and Brent has spent 3 weeks below its 20-period moving average on the weekly time frame. The sectors heat map is mostly red and showing caution, as well as the international markets. We'll look at some IBD 50 names. If you're thinking about taking any longs, look at these stocks. Also, we're seeing MarketSmith stocks that are showing relative strength, some squeeze candidates, and the candidates in red are shorts, and most likely we'll see some more downside. Bukowski has 3 of 5 green with the CPI signal mixed red since July the 19th, moving from 78.1% down to 32.2%, usually an area where we start to see an inflection and a move in the opposite direction. It is currently bearish, while showing 18 bearish patterns, 3 bullish patterns, and 129 patterns waiting for breakout. Bottom line this week, trading against the trend as the bulls are fighting seasonality, August being the weakest month of the year for equities. Starting off with the S&P 1500, we should note that these 500 big caps, 400 mid caps, and 600 small caps have started to show a red signal. So at this point we're cautious, like we were back here in the beginning of May, when the last round of tariff talks, the markets then moved sideways to slightly lower and took about 3 or 4 days before it really lost the moving averages. This time we're dropping a bit faster. You could argue that these are 3 black crows, a bearish signal. We did bounce though at the 50-day moving average on the S&P 500 and produced what looks like a hammer, though bearish. We have RSI nearing oversold. That could take a couple more days before it gets there. If we see more selling, as volume shows 3 distribution days in a row. SPY weekly shows RSI right above 50. That could dip below. That would be a caution signal and a reason to get more stocks out of your portfolio if it does lose the moving averages here and this bit of support right around a 382 Fibonacci level and 50% retracement. Big distribution week. MACD still above its signal line, so the bulls are still in control. We could see further downside, but started to see some buyers step up at the low of the day on Friday. As we noted on the 60-minute time frame during the trading session, oversold conditions on the 60-minute, most likely sees a follow-through. We had tick cumulative rising into the close and price action with a pop to the upside at the very end of the day. Yet, if we remove the noise and just focus on the Renko charts, we did get our first red brick since this downtrend started into May, with the NASDAQ as well. On this weekly time frame, testing support, RSI still above 50, pretty much telling us the same picture as the spiders and the S&P 500 at the present time, as all of the big cap tech stocks, the FANG stocks, and additional names continue to move lower, with the tariffs impacting semiconductors heavily, while Tesla managed to move higher. With the takeaway on the Q, as long as the weekly line chart continues to point lower, we have to anticipate further downside until we can see this signal turn back up and support any bullish thesis as a whole. As far as risk on, risk off goes, IWM is giving us a risk off. It's still at support at the moving averages. RSI is at 50. It wouldn't take much for this to get pushed in either direction, it seems, with RSI at 50. We had the same thing we saw on the other indices, a big bearish week volume-wise, and MACD still above its signal line. This price action momentum is diverging. With the IWM moving sideways, MACD continues to put in lower highs. So I would expect this is probably going to drop through this level. If it doesn't, that would be a surprise and something we would note during the live trading sessions this week. Looking at the NYSE as a broad measure of market participation, the 50-day moving average price removed continues to move away from the flat 200-day moving average, while the daily came down and touched the 130 period moving average. If you have 255 days in the trading year, round it up or round it down, whichever you choose, that gives you 260 divided by 2, or 130. This is the 130 moving average half a year. Missed this trend line, but looked like it was trying to move back above it and touched the 130 and started to reverse by the close. New York Stock Exchange advanced decline is putting in lower lows and lower highs, so we'll have to keep an eye on that, as well as the number of stocks making new highs versus new lows. In the upper panel, we briefly dipped below zero on Friday, closed back above it. Don't know what to make of that other than the fact that the moving average has been moving sideways, and we spent the entire year above the zero line, with this exception right here in May, along with the put-call ratio, which is becoming more bullish the higher it moves. The more people that are buying puts for protection, supported by a VIX that appears to be reversing. This is the inverse VIX signal that we're watching here on a 60-minute time frame. If this emerges and becomes green, that would be a short-term bullish signal, bearish until it does, reinforced by what we saw on the daily time frame. We spiked to highs and we've reversed, closed near the lows of the session, while the front month VIX to the 3-month VIX shows an inflection near a bullish zone. The higher this moves, the more bullish it becomes, in addition to what we saw on skew, which, if this started to spike back up towards 135, that would show institutions are more concerned in the short term. As this continues to drop, it's telling you that they have less interest in hedging below 120. You can see that it dropped off last week. I would have expected to see it moving higher towards 135 instead. So this is actually more bullish than bearish at the present time, even though price action did pull back fairly substantially on Thursday and Friday, and something that will be focused on as we start the week. Here is breadth viewed as thrust, momentum, advanced decline percent. Usually gives you some good signals, especially on the reversals below minus 30%. When that happens, a lot of times you'll see an inflection and move back in the opposite direction like you see in the S&P 500 in the top two panels. The mid caps, the small caps, and the NASDAQ, which the latter indicates we're very near an inflection zone. Very oversold on many of those big cap tech names. Wouldn't be surprised to see a little bit more downside because we do have a TTM short signal fired early on Friday, has yet to reverse. But if this does dip below 30%, look for a reversal Tuesday, Wednesday at the earliest for a potential long over the next few days. With the biggest issue being seasonality for the month of August. If you go back to the beginning of this secular bull market that started March 9th, 2009 into the present day, 2019, you can see that August is one of the worst months of the year for investors. It makes sense. Most people are on vacation. A couple of weeks before school starts, indicated on the Dow Industrials, the S&P 500, the NASDAQ Composite, 3,000 stocks. June actually being a little bit worse than August. And remember, last month we told you that the strongest month of the year for technology was July. We did see that play out. So if you were trading the NASDAQ, so keep that in mind as we trade into the second week of August. The bond stock ratio between the 10-year UST and the S&P 500 is short-term bearish as it crosses the 65-period weekly moving average. Looking for a push higher and an inflection in the short term as bonds broke out. Seeing favoritism this week over equities. For those of you who took TLT last week, we had a nice bullish breakout. RSI is showing muscle. At some point, you would expect that institutions will rebalance their portfolios if they haven't already. Despite that, you can see TLT moving higher with the S&P 500, as we saw back in the beginning of 2016, coming out of the 2015 lows. S&P and TLT continued to push higher at the same time. We saw some appreciation in 2017 with TLT moving higher while the markets rocked to the upside as well, the S&P in the top panel. And lately we've seen TLT rising along with the S&P. So it's not a signal in and of itself. It's just telling you that TLT has been a good trade in the short term. All of this happening, of course, while junk bonds and high-yield corporate debt managed to stay at highs. So as the yields move lower, bonds move higher. You have people who are chasing yields and are supporting junk and high-yield corporate debt. So you don't see a fall off here. So this is one signal that's flying in the face of the weakness that we're seeing on the S&P, the NASDAQ, and the IWM. If this starts to drive higher, that's showing you investors are taking additional risk. Maybe IWM does turn back up. We'd like to see IBB, a third risk on indicator, moving higher this week. Note we do have some names like Celgene, Biogen, Amgen, all of the big cap biotech names looking pretty strong this week. Something you might consider before getting too bearish and extreme with everyone else. All of this happening, of course, showing more mixed signals like the British pound US dollar, which continues to move lower. As we saw last week, the FTSE, the London Stock Exchange, was up 20%. I don't know if that was due to Boris getting elected or not. I'm not familiar with the politics over there, nor am I interested. That's not my purview. So this is more for the people that are over in Europe trading the London and the FTSE. This continues to move lower. That's supporting higher prices on the FTSE and the London Stock Exchange. As far as the U.S. indices, however, the U.S. dollar The US dollar had spiked to recent highs. It was much higher back in 2000, 2001, trust me. This is pulling back now from the highs. This should still be a headwind for commodities. In addition to the Japanese yen, which spiked to the new highs, so that is creating forced selling in the Nikkei. Yet even that major index did manage to hold near range lows. So if this does start to move lower, I'd expect to see the yen higher and vice versa. So all of these cross currents are telling us to be nimble, reduce our risk, and wait for a trend to emerge instead of trying to guess which direction the market's going to go in any given day. Yields and commodities indexes are moving lower, while commodities like copper, very economically sensitive, is moving lower. You want to see this moving higher like it was in 2019 from the December lows, not lower, while gold tries to push higher. If the dollar does move lower, look for this ascending channel and price action to continue to follow the short-term period moving averages. Note it's above areas of supply. Gold could continue higher this week if you're trading that commodity, while West Texas crude and Brent on the weekly time frame showing you that we've spent 3 weeks below the 20 period moving average, basically creating a sideways pattern or a triangle, tightening smaller portion of the triangle. At some point, this is going to break out in one direction or another as commodities continue to be affected by news, supply, and the strong or weak US dollar. So here is the heat map, read from left to right. In the top panel, you can see each week on Friday this is updated. We've moved from chartreuse green in majority to crimson in the majority now. As of Friday on 8/2, we continue to show risk off or weakness in the markets. Keep in mind that this can abruptly change like it did back in May, from red to lime greens into green within a week or so. So we could be very close to a change in direction. The same can be said for international markets, with the exception of Turkey, which is showing strength. Here is the IBD 50 stocks for the week. An observation, 10 of the stocks closed green on the week, 40 of the stocks on the IBD 50 closed red. So we're fighting a headwind in the short term until the indices turn back up. Some of the stocks we're looking at are ACGL, Arch Capital, in addition to ARES, Ares Management, holding the 20-day. In both cases, the 20 and the 50 are climbing. Looking for follow through there. CDW, Hammer, or Hanging Man candle at the 20 period moving average, looking for a follow through. Chegg, which had its CEO on Kramer last week, talking about the earnings better than expected and forward guidance looking good for Chegg. This was one that was on a weekly squeeze back here a few weeks ago. We're also looking at Chipotle Mexican Grill, which has graced the IBD 50 for a couple of weeks, looking for these wicks on these candles to support a follow through in the bullish direction short term. We have Discovery Financial Services holding at the 20-day, a hanging man candle or hammer, if you will, at the moving average. RSI is still moving a bit lower. It's above 50. This could turn back up. If financials are strong this week, that would be a plus. EPRT is another stock that showed strength relative to the markets, pulling back. We did pull back on Thursday, but found buyers on Friday. Look for this to follow through. RSI is pointing higher. We had some really nice volume on Friday. Floor and Decor also broke higher last week. Many of you already caught this. It stopped very near this pivot. If we get a follow through, look for RSI to point the way. I'm thinking that it's going to continue higher. Look at that volume. Looks excellent. Could be forming a cup, in which case the right side would be accumulation into a handle near the 48 zone, 49, maybe 50, before you see the last of the sellers capitulate. At the highs, typically form a handle and then break out a continuation pattern. Use the depth of the pattern, approximately 10 to 12 points. On top of this would give you about $60 on the upside. Somewhere in between there, 55 to 60 would seem like a reasonable target post earnings. Additional stocks like Globant, GLOB, Hanging Man at the 20-day, 20 and 50 are climbing. MTZ, this is a stock that I would watch its competitors. Huge volume on Friday. I wouldn't chase it. What I look for is a flag now. RSI is near overbought. Keep an eye on this group. In the building, installation, and maintenance services for communications and utilities, this had a big beat last week, 54%. The previous earnings, they showed 66%. And prior to that, 128%. I would think this stock is going to break out and follow through like you're seeing here. The green area is your profit zone overhead, just shy of 100. So look for higher prices in Maztec. Just don't chase it going into this week. And here are their competitors right here. Great Lakes Construction, Road, KBR, Wilscott, and Jacobs Engineering, to name a few. Retail stocks took it on the chin. Lulu stopped us out on Thursday, pulling back pretty quickly as retail stocks showed weakness. While education stocks like New Oriental, a Chinese name, tutoring, and education facilities throughout China, coming back to the 20-day, a little fade here, setting up a long in the short term. PagSegura, this is one that many of you have traded over the last few weeks. PagSegura, PAGS. Many of you traded this one prior to earnings. Nice bullish breakout back here near 30, appreciated to $48. This last run being from an earnings breakout and follow through. Palo Alto Networks pulling back to the bullish 21-day moving average in this case. RSI is still above 50. If this does see a bullish candle on Monday, the safer entry would be to wait for Tuesday, another bullish candle, then anticipate a break higher, and that the buyers that were here and present over the last 5 weeks prior to Thursday, Friday weakness will continue to show up and push this higher at the top of the list of security names. StoneCo, we pointed this one out a couple of weeks ago. Looked like this was going to follow through out of this breakout. 3 white soldiers, move sideways, dip back to the 20-day. This is actually a very bullish signal that buyers stepped up, not too far away from where we initially looked at it. Buyers stepping up again. Looks like this is going to follow through. RSI above 50. This is probably one of the better setups this week for a cheap stock. $30 per share. If you look at earnings, we're confirmed for August 14th after the close. Last time the company beat by a wide margin, 999%. 3 cents reported March 2018 versus March 2019, 36 cents. You can see annual sales and earnings are growing. The metrics here for IBD, composite rating 99, A's and A pluses, that's a great thing. Brazilian company that provides financial technology solutions for merchants and integrated partners. Look for this to follow through. If it does break out, you can see your targets right here are back at the previous highs. I like this one. OLED, this one caught our attention on Friday. I believe one of you, maybe a few of you, noticed this. I believe Lee Star mentioned it. Big reversal, closed back above the 20-day. That tells me they are supporting price action. Buyers found that to be a bargain, yet they're still looking for higher prices. RSI is above 50. Look for that to turn back up. A safe entry would be a bullish day Monday and a follow through on Tuesday for an initial entry. Look for that trend to continue, and the 20-day looks very strong. As unfortunate as it was, we were at the profit zone from the last breakout. The blue area is the breakout zone, the pivot zone. The green zone is where you take profits. This came all the way back to that pivot and looks really good considering it beat earnings by 300%, 23 cents versus 92 cents. Annual sales and earnings continue to climb. A nice pattern if you're looking for longer term swings. A's and B's with high 90s in EPS rating and growth. Look for this one to follow through. It designs organic light emitting diode devices for flat panel displays used in consumer electronics market. Having shaken that stigma from losing the Apple contract, it followed through and continued to move higher as LED flat panel displays continue to be ubiquitous in the markets. Some additional names that showed relative strength as noted by Investors Business Daily. Ball Corp. This was one that I mentioned last week. Tight Bollinger Bands, TTM broke out on Thursday. Flagging now, so this won't get away from us, it looks like, if this comes back a little bit more. Ball with an earnings beat of 10%. Good annual sales and earnings, A's and B's. In its metrics, 88 composite, 63 EPS. Relative strength line climbing on the breakout. Crown Holdings still near its pivot, could break higher. Relative strength line is climbing. Good annual sales and earnings numbers, as well as IBD metric. FMC manufactures agricultural, industrial, and consumer chemicals such as insecticides, herbicides, and fungicides. At the pivot, looking for follow-through, relative strength line climbing. Had a nice earnings beat of 11%, annual sales and earnings increasing. A's and B's in their metrics. Composite rating of 95. Gentex in the automotive industry, parts and accessories, related automotive industry products, garage door openers, etc. This one came near to the profit zone, so that's probably why we're seeing a little bit of weakness. This comes back to the 20-day. Look for buyers to step up on Gentex, GNTX. Hilltop Holdings, a bank in the Texas area, 71 offices in the pivot zone. Tried to break out, pulling back to the 20-day. You know we like that kind of setup as we watch for buyers to show up. We had our first bullish day bounce from the 21-day. Volume looks good. A follow-through on Monday would be a nice plus for this lower-priced stock that reported decent earnings a week ago, beating by 77%. IPHI broke out this pivot, the blue zone, up to the profit zone, made 21% there. Flagging back to the 20-period moving average, still very strong. Look at the above-average volume on an earnings beat of 133%. Annual sales and earnings climbing. A's and B's and their IBD metrics. We got a 98 composite, 96 EPS. Designs analog multiplexers, encoders, amplifiers, and memory buffers for servers, routers, etc. With price action supported for 3 days. Look at those wicks. Beautiful wicks down at the 21-day. Bollinger Bands and Keltner channel both are moving away from price, telling you that this high volume is most likely institutions picking up shares. Look for this to follow through on Monday and Tuesday. Motorola Solutions, yet another name that gives us reason to think there could be more bullishness in this market than many people perceive. 16% beat, good forward guidance. Annual sales and earnings out in 2020 is $8.50 per share. That's a whopper. A's and B's on its metrics, manufactures two-way radios, wireless network security products, and voice and data communications systems. Look at that bullish engulfing candle that we saw on Friday, completely encapsulating the previous week's price action. If this follows through on Monday, look for a breakout. RSI's pointing the way. QSR Restaurant Brands. This is one that Warren Buffett owns in his portfolio. Berkshire Hathaway. Good annual sales and earnings, good IBD metrics. Pulling back to the 20-day. Great earnings for a restaurant-related name. not historically one of the best areas for margin. Breaking out from the $68 range, headed to the profit zone just overhead. It's 18% from the pivot, so I wouldn't chase it. Maybe it pulls back a little bit, gives you an entry. Did see above average volume, higher than usual on earnings. So that looks pretty good going into this week. Sherwin-Williams Paints beat in its earnings late July. Popped out of this pivot zone near 475, pulling back to the 500 zone, looking for a bounce. Whopper annual sales and earnings per share, $24.20. That's crazy. A's and B's, composite rating 92. Obviously, you know who Sherwin-Williams is. Nice looking chart. Tight Bollinger Bands. This was the area to buy options before volatility exploded. Now it's pretty expensive. Don't try to trade this one with options unless you're doing spreads or some other advanced technique. Skyline Champion manufactures single and multi-section homes, modular homes, and park models. Keep an eye on some of the competitors in this group too. This one's breaking higher. Relative strength line climbing. EPS beat to 17%. Good annual sales and earnings. Good metrics. Let's look at the weekly. This shows you the competitors over here on the left. I was going to say Winnebago. I wanted to confirm. Some of these names seeing some potential for follow-through. A few of you asked me about Winnebago last week, I believe. Nice trend on the weekly. Relative strength line climbing. And good earnings beats all along for most of the last 2 years, with earnings no longer an issue and behind us. Twitter also showing strength. We have the 43 calls. I'll be rolling those out each week as this continues to show strength. Looking like it's going to follow through on this weekly time frame. The profit zone's around 50. Look at the earnings beats. This time around was historic, 829%. You can see this trend, which started back here in 2017, just continues to increase. They finally figured out a way to make money with Twitter. Big cup and handle on the weekly. Twitter's actually one of my favorites this week. And finally, Berkeley WR Corp. Insurance, reinsurance products. Nice trend. Nothing makes me believe this won't just continue higher. Earnings beat 20%, reported this past July. Stocks showing up with squeezes like Boston Scientific. Just check earnings and sales. If this breaks higher, look for a follow-through. Big cup and handle. Biogen squeezing. Starting to show potential for a break. A couple of times it did this before and never broke out, so could still base down here. Have a position in common. Nothing spectacular at this moment in time. And Celgene, which is starting to show some interest in moving higher. Tight Bollinger Bands, relatively speaking, relative strength line is climbing. And stocks, if you're so interested, showing weakness. That could be shorts, Agilent Technologies, Advanced Auto Parts, losing support here. I believe Susie said she's taking this one this week. Amazon, Cerner Corp, if it loses this support level, could be headed lower. ConocoPhillips, some of the names in the oil and gas industry group looks weak. Cisco looking weak. May reverse here though. Darden Restaurants looking weak. Not all restaurant chains are working. DXC Technologies, a few people mentioned this one as well. Note the tight Bollinger Bands. The TTM is firing to the downside. Volume is increasing. RSI is below 50. Look for this to continue lower. Any bounce will probably get rejected and follow through to the downside. Chip stocks like Xilinx and the home builder ETF, which is showing some weakness, could reverse back here, but unless this moves lower and most of the home builders move higher, this could get pretty weak in the short term. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com with your weekend video newsletter for August the 4th, 2019. Your watch list will be out later tonight around 11:30. Last week it was a little bit late. West Coast around 8:30, maybe 9 o'clock. Bottom line, wait for the opening range. Let's see how the markets open up on Monday to start the trading week. I hope this helps. Take care, and we'll talk to you soon.